Hello and welcome to the Miami Real Estate Market Update webinar in February 2023. My name is Marian Ott with Douglas Elliman Real Estate in Miami Beach. Economists call 2023 the year of uncertainty. The new word of the year by the Collins Dictionary is called permacrisis. And the definition of permacrisis is an extended period of instability and insecurity, means living through a period of war, inflation, and political instability. And this is exactly what's going on in the world right now. And this also has an effect on the real estate market. And you can see that there is a lot of insecurity out there. That's why you sometimes have like those roller coaster prices. People are very insecure and not really sure what is going to happen. So first we have to differentiate what we are looking at. We have the nation, and then we have Florida, and then we're having Miami. So Miami is having over 30 municipalities, and I work myself in about plus minus 10 of them. And in order to get like a really accurate analyzation, you have to look at every single city or town, every type of real estate, meaning a home or a condo. Is it old or new? You can't compare a $5 million with a $1 million property. You just cannot generalize. And every corner of the street is different, and all those components need to be looked at. So if you want to be detailed, you need to know what you're doing and analyze every single one. And there are like so many sub-markets in Miami. I would probably say maybe like 50 to 60 sub-markets. So, and each corner again needs to be analyzed individually. When I'm talking to customers, especially foreign national, most of them say your market is just so, it's not predictable. Yes and no. You need to know what you're doing. You need to know what to look for, what brings the price up, what brings the price down. For example, if you're like buying in a building where there are like a lot of rentals, you cannot compare a rental building with a building where permanent residents are living. It's a price difference. And there are like so many other components you have to look at. This was just an example, but just to give you an idea. And you need to analyze it down to the buts. And if you do it properly, you start to understand what to look for and what's going on. And you are able to make an informed decision and are able to also kind of look into the future. Yes, the higher interest rates have a significant impact on the real estate market, no question about it. If the interest rates go up, the prices come down. And the market right now is correcting. Yes, the sales came down to a certain point, not everywhere. Some of them came down, some of them didn't. The inventory is higher, obviously, but the prices haven't come down. So according to the top economist, there will be about 20% of wealth being burned. And in 2023, there is most likely no question about it. It just depends what kind of investment. And some of them lose, some of them win, some of them just hold on and do nothing, and nothing will happen. So it all depends. The current interest rate right now, I would say it's not over excessive high. Yes, it's double from last year. But if you look at the average interest rate over all from the past, it was like around 6 to 8% was like a normal interest rate for so many years. And what we had during COVID, the 2.5%, I mean, this was too good to be true. And this was like the lowest interest rate we ever had since 1974. There was not such a low interest rate ever. I mean, we had interest rate for 12, 14%. That probably was the highest. That was the highest. But the average for all the years that I'm in real estate, and I'm almost 30 years in real estate, has been like between 5 to 7, 5 to 8% in average. And this is where we're going right now. So there's a good saying that I really like, and it's called "The chaperone removes the punch bowl before the party is heating up." And this is exactly what the Federal Reserve did. The Federal Reserve is the chaperone. They removed the punch bowl because otherwise it would have heated up even more. And they really need to get the inflation under control. And that's what they're doing right now. So, I mean, they are on a track, and they expected it a little bit better for the end of 2022. It hasn't been what they were expecting, but now the interest, I mean, the inflation came down to like about 6%. And that's very good. But in his last speech, the Federal Reserve head, Jerome Powell, said that he is on the track and he will continue with this track because he wants to see an inflation rate of like 3.54%. So until we're going to be there, he's continued to increase the interest rate. I mean, some say that the interest rate might come down again. I mean, I am not seeing this in 2023, maybe next year, but I don't think they will come down in 2023. But I could be wrong, because if the inflation rate goes down significantly and faster, then the interest rate might come down again. So at this moment, we're seeing price reductions on the overpriced and overinflated properties. And of course, this takes time. Sellers are not accepting this from 1 month to the other when the interest rates go up. It takes time. And now about 6 to 8 months later, sellers understood that they cannot get the price that they were able to get in 2022. We are having a total different market than we had 8 months ago. And they cannot go on top the highest sale or on top of the peak. And that's what some sellers try to do. There was the high sale and they try to go above the high sale. To give you an example, a condo sells for $1 million with an amazing view and nice finishes. And then another person in the same building comes on the 5th floor with no view or view of the parking lot and no good finishes, and is also asking $1 million. So this $1 million is totally overinflated. So of course, this price has to come down. Those times are just over, and the sellers need to understand that, because buyers are not willing to pay the price. And as you know, the buyers, they make the price. So, I mean, if a seller really wants to sell, I can only recommend to price it right, because if you're not having the right price, you will not gonna sell it. And we're not selling right now within a week or within a couple of days. I mean, right now, we're kind of back to normal conditions. And if you like to sell a property, you got to count in like 1 to 3 months, something like that. But if it's a good property and it's priced right, it will sell. There's no question about it, because the demand is there. And this stands for every price range. Again, a lot of overinflated product and very limited great stellar product. But a lot of buyers are waiting for that limited stellar product. So there's not just a few buyers. The demand is very large, but again, the good property is just very, very limited. And you as a buyer, you have to understand when to pay the price or where to make a low offer. And the buyers also need to understand that they cannot expect prices, pre-pandemic prices anymore. This is over as well. I mean, the prices went up And that's where they are, and it will go maybe a little down, maybe a little up, and the very overinflated will come down a lot. These are the properties that are being reduced by 20% because the buyer is simply not willing to pay that price for those particular properties. And in fact, it's a very good opportunity for everyone who has not purchased anything during the last 2 years. Now it's a good time to do so. You are not in the peak of 2022. The prices already came down, and you will be able, if you find that property that you like, go for it, because you don't know when it's going to be back. It might take a long time until you will see it again. In fall of one of my webinars, I was saying that we have to wait and see what's happening in spring 2023, and then evaluate where we're going. And right now, we're right before spring, 6 to 8 months after the peak time. And again, we're seeing the price reductions are coming, the sales are okay, and we're going to be fine with the real estate. The demand is simply there, and a lot of people are looking. And just wait. If you're interested in any statistics of neighborhoods or anything, just shoot me an email or shoot me a text message or WhatsApp, and I'll be more than happy to send it to you. So, in order to have a crash in real estate, the demand needs to decline, and that's significantly. But again, that's not the case. The demand is up, the inventory is okay, but the good inventory is extremely limited. And that's our challenge right now because there is such a lack of good product. And buyers and sellers, they both need to get realistic. And the sellers are getting realistic right now. They're starting to price it right. And again, the buyers also need to understand where to pay the price and where not to pay the price. There will be an understanding, I'm sure, between buyers and sellers very soon. It is starting already. And then we're kind of back to a normal, healthy market again. So to recap everything so far, for the last quarter, 2022, the sales came down, the inventory obviously went up, but the prices stayed up. So again, we have to differentiate also the prime properties and the, let's say, BC properties, not the nice properties or the ones that need work, the ones that are like not having a good view or need renovation or anything. So, I mean, the prime good properties, buyers are willing to pay the price, but buyers are not willing to pay the price for overinflated properties. A lot of people, in fact, they would like to move, they would like to sell their properties, but they don't have a place to go. So they're just staying and waiting because they cannot replace their property. They either have to move out of Miami or they have to go into a totally different product, but they cannot replace what they have. And that's where the high prices are coming as well. Because they say, if I get the price, then I'm going to be out of here. If I don't get the price, I'm going to stay here. That's another reason why the prices are high and the good inventory is very low. But we're having a correction. A correction is on the horizon. We're going to be there very, very soon. And people have a lot of equity in their homes, and there's no urgency to sell. We're not having what we had in the financial crisis, not even close to that. Especially in times like this, real estate always has been a shield against inflation. In fact, the prediction is 3 to 5% increase for 2023 on a nationwide level. And Florida and Miami, as we all know, is different. And Miami is a very special and unique market. And I'm going to have another webinar within the next couple of weeks. And please subscribe to my YouTube channel, because the next webinar, I will explain what makes Miami different to the rest of the US and Florida. And Miami really has a very special position. So besides the interest rate and the inflation we talked about, there are like several other time bombs or burning fires, we can call it, that we're dealing with right now. And of course, that's the recession, that's the supply shortage, that's not over yet. Then we have construction costs, the lack of qualified workers, then the energy crisis. And then what is like very out of our control, this is like geopolitical items like the war in the Ukraine. Then we don't know what China is going to do. Are they going to tighten their export regulations, or what is Russia doing? I mean, these are items that we are like, I mean, situations we cannot predict, and it's totally out of our control. We can just watch trends and be aware and then make an informed, make a kind of decent decision. So, I mean, there's a lot of going on in the world, you know, and of course that all has an effect on the real estate market and creates a lot of, you know, insecurity. So the positive, I mean, what we're having in Miami and Florida, and there's a lot of positive to Florida, and this is what no other state has. We had and are still having a historic mass migration to Florida. And during the pandemic, a lot of people moved to Florida or decided to move to Florida. And these are groups from all kind of ages and backgrounds. I mean, we have the baby boomers, you know, they were always thinking of like moving or having a second home in Florida. And during COVID, they decided, let's do it. Why are we waiting for? And they did it. And then we had like a lot of people that were able to work remotely from home, and they did it, and they moved to Florida. And all kind of other age groups moved to Florida and backgrounds. During COVID, we had about 1,000 people a day coming to Florida. And at this time, we are still having like about 400 to 600 people per day moving to Florida. So we have a mass migration. It's a historic mass migration to Florida. The other states don't have. They are leaving New York. They are leaving Chicago. They are leaving the West Coast. So, and they're coming to us, to Florida, which is a very big plus. And here again comes supply and demand in the picture. And that's what's making the real estate cycle. So many companies transferred their offices from up north to Florida, over 100 companies. Some of them even opened their headquarters. So, and they all moved into the 3-county area, which is Miami, Broward, and Palm Beach. And we're literally seeing a transfer of wealth from the states up north and the West Coast. And they are not only coming because of tax reasons, they come because of quality of life and also the weather, yes. And for the last 2 years, the Americans themselves discovered Florida again. And I mean, we have to be very grateful to live in such wonderful state right now that the rest of the United States has been discovered, you know. I mean, we had a lot of foreigners in the past, but now the Americans themselves discovered Florida again, and this is wonderful. So again, and this is not counting in the foreign nationals that are also ready to get started to come to Florida again, especially South America. I mean, South America is such a big market. I mean, Miami literally is the gateway to the Americas. That's why we have like all that multicultural and so on, and they all have their branch companies in Miami and Florida. And in fact, we exceeded the first time the New York job market. The Florida job market exceeded the New York job market for the first time in February of 2023. And then if you're looking at demographics, at this time, there are about 72 million millennials. These are in the age of like 23 to 38. And they are looking to buy property right now, not only in Florida, but all over the nation. And here you can see real estate is in demand. And the housing market is simply driven by supply and demand and demographics. And we know the demand is there. And if we look at economics and the business cycles and where we stand right now at this point, the real estate market will be fine. So in fact, in 2023, there will be less than a handful of condo projects that are being completed. So in 2024, there are literally none. And then in about 3 to 4 years from now, we will have more condos coming on the market. And 2024 might be like a hole in the market because there's no inventory coming in. It's going to get interesting. So even if we have the higher inventory right now, which is not really high because we're still only 1/3 of pre-pandemic inventory. And if you see what's available in the popular buildings, there is no more than 10% inventory, just a few condos. I mean, not even 5% of inventory. And less than 10% of inventory means there's a seller's market, and anything higher than 10% is a buyer's market. If you're looking at the supply, if we're looking at the supply, and to put this all into context, we had in the second quarter of 2022, we had a 2.5 months of supply. And then it went gradually up. The Fed started to increase interest rates in July. And there you can really see the moment they started interest rates, I mean, it slowed down, and then it slowed a little more. And then September, October, November was kind of really quiet. Then December picked up and January picked up, and now we are like, we're selling, it's moving. I mean, I personally would consider it as really healthy, not a real estate crisis at all. And we're going to see how we're going to go through spring and where we're going. So I would say right now we have like an inventory of maybe like 7 to 10 months in average. I mean, you have neighborhoods, they have like not even 2 months of inventory, and then there are neighborhoods, they have over 20 months of inventory. So here we coming again to all the sub-markets, but in average, we have about 7 to 10 months in inventory, again, which is very low. And out of this inventory, the prime properties are very, very limited. I see myself within the next few years or next 2 years negotiating around the peak price from 2022. So we have reached that peak, and it will be a little bit above, a little bit below, but it will be plus minus around the peak for the next 2 years, I would say. And it continues to stay, it continues to remain exciting in the real estate market. And yeah, stay tuned for the next webinar and why Miami is so special to the rest of Florida and the US. And thank you so much for listening. And please feel free to reach out to me at any time, and please subscribe to my channel. and I'm always ready to discuss real estate and the market. And if you liked what you listened, please subscribe and give me a thumb up. Thank you.